Hey traders, hope you are well. Welcome to the coaching session. It's Sunday, we're all chilling out, we're waiting for Arsenal to win the game later on this afternoon. So it's all happy and cheerful. And so the couple of things I want to talk about today for VIP members in particular is several things. The first thing I want to talk about is liquidity buy sell zones, which you can use, continuation patterns, which you can use. And also, what else do I want to talk about? I'll talk about gold on steroids, how that works a little bit more, because it's always good to rehearse and repeat, because the patterns don't change actually. It's a continuation pattern or it's a reversal pattern. It doesn't really matter, but useful to know and just a reminder what you're looking for. The other thing I want to talk about is the Advanced Pro charts on the 1 hour chart. Good to do a top-down analysis from the 4 hour to the daily to the 1 hour before you go in, but I just want to cover this for you so you've got a better idea of what it is. If you've got the full version of the Advanced Pro charts, then you'll know this and you'll know what the tools are. So where shall I start? Let's start with liquidity zones. So what I've got on here, I've got the sessions here marked. Asian session, London session, New York session in yellow. You can't really see that. Let me see if it's better when it's dark. Oh, that's worse. Brilliant. Okay, but yeah, you can actually see they're faint, but nonetheless, I think you can see those London session is there. So at this high and low points, these are what we call liquidity zones. These are or liquidity sweeps as they're known. And good trading opportunities to look into if you are trading. This is gold, works on anything, any asset, of course. The first thing that we see is this big fat yellow zone. We are very interested in that, aren't we? Okay, so that's the first thing. So this is a 30-minute chart, as I say. And what I've got here, I've got the 200, I've got the 100, and I've got the 50. So the bias is down. So if the 50 is below the 100, below the 200, then the bias for the day is sell. It's down, clearly. That's fairly obvious, I think. So what you're waiting for in a high liquidity zone, you're waiting for the price to come up to the previous Asian session there, or the previous London session. That might not be painted. If this is London, yeah, this is London. So the high of actually London comes in quite late, doesn't it? There. Okay. So that is a good way to get into the chart and to actually get into a position quite easily and nicely. Thank you very much. So you can draw a trend line. It's not a very good one. Let's do that a bit more accurate. Now I haven't got Heikin Ashi on. Let's see if Heikin Ashi is better. Not much, not much. But when you turn off the Heikin Ashi charts, there's something else that appears. You might recognize it or them, is the FEG. I've got the FEG set on the 4 hour, which I'm very interested in. So there's certain points here where we're going to be of interest. So whenever you see these highs, you can draw some lines before the trading session starts, before you make any decisions. You can actually draw these lines, liquidity zones, and use that information to actually make decisions. So I'm just drawing the previous session highs and lows there. Okay, just want to shorten the line a little bit, but yeah, so let's have a look at that. So that's the Asian high at 41.38. That's the London high previously at 41.56. Let's draw some more lines. Now, of course, you're looking in hindsight, but the actual highs and lows of the Asian session, you'll know about those. Or the London session, when it's finished, you know about those. So it's all about looking at the previous highs and lows to see where high liquidity is, liquidity sweeps are likely to be. So we can see here, as an example, we can see that this Asian session here at 41.37 is very interesting, isn't it? We can see that this area here is of very high interest. We can see that the London session, I think that's about right, at 41.56 is the previous high on the previous day on the London session. So that's very interesting. The other thing that we know for sure is the previous highs, but we also know where the bias is. The bias is down because we've got the 50 below the 100, below the 200. This is not conventional in terms of trading, but it's something that works really well. So if you're going to get into this position here, you're going to have a position as it breaks down with the previous high, and you're going to go 2 to 1. Okay, something like that. You can work it on the 15-minute chart just as well. Now the 15-minute chart will be jumbled up in terms of the moving average, but you're looking at a longer term view. So let's go into this a little bit deeper and a better understanding of liquidity zones and change of character in particular, and then continuation patterns with the sell signal, which is what we're looking for here. In this instance, it's during an Asian session. So we know from facts that we've got the previous highs, 41.38 on a previous Asian session. We know we've got a previous London session at 41.55. So they're areas of great interest to us. So what are we actually looking for in terms of executing the trade? Well, there's a couple of views on this. The one is to actually simply sell it in the supply zone, which makes sense. If you've got the gold on steroids, it'll tell you that there's a divergence, convergence, and it also gives you the number in terms of how powerful that signal is. However, if you don't have that, then you can just use this information to actually say this is an area of interest. I'm interested in this because the overall direction, daily bias, is down. We can see that by the 50, the 100 and the 200. And so the bias is likely, highly probably, likely to break down at some stage. So these lines become highly significant. And we can see if we zoom in a bit closer how significant they become. So as the price moves up into the previous London zone, and there's also a previous Asian session there as well. Put a line there if you wish. And this London session. Now, of course, this is a previous London. This is during the London session here. Then it goes into Asian session for the fall. So we know from a fact that we have a previous Asian session at 41.37. We can see that the price has been rejected in the London session, previous London open, London close, and then we can see that the price doesn't like it at this session during the previous Asian session, and the price has simply come back up into that session and been rejected. So we can zoom into that, and all you're looking for is the rejection candle to come in and then to go short at that point there. If you're at your chart now, this is 7:30 in the evening, heading into the Asian session. It depends what time you're trading, of course. But the theories are always the same. So look at this session here. So the late session went down. It tried to come back up into the previous Asian session high and got rejected completely. So this is a very high liquidity zone here. And the price simply rejected it completely. I'm going to go into a little bit more detail in terms of 5 minute for entries in a minute. Let me do that now for that particular instance so it helps you. So let's get back to that instance there so you can get a better idea. Here we are. So the first thing that we notice into the supply zone is the breakdown. Very close. You can see this 50 moving average has now turned red and the price is moving down. That's an indication that at this point the price is being rejected. So that could be your trigger with a very tight stop here. So you'd be getting in very early at 41.48, something like that, with a stop here of 160, let's say. So that would be your plan of action. Step 2, you can wait for the change of character completely, which is the breakdown here on the left, on the right, as the 5-minute chart breaks down here. Your stop is the previous high. Very bad line. And then of course it's 2 to 1 to the south. Now let's carry on with that theme. So we know from a fact that we have a previous Asian session high here at 41.37. It's still the same from previous sessions. Actually, we can actually draw that across, can't we? So if you just click on the right on the line and then click sync, it will appear on all your charts somewhere, in theory, he said. I don't know why that's not syncing, but there we are. Okay, normally it syncs and it comes across and goes into there. But anyway, we can see that the price has moved up into this area again. Actually, let me draw a line there separately so it's easier for me to see. Boom. So yeah, 41.37 is the very high liquidity zone, as we can see. And also there's a double top here on the 5-minute as well, which you can use to your advantage. Again, very soon after that, there's a breakdown on the high liquidity zone here, 41.37, and then you have change of character here, and the price simply tumbles. Okay, so that's a really good example of how to use liquidity zones from previous Asian and London and New York sessions on very high probability, of course. Now, the other thing while I'm here is you can do is manage it. I'm not endorsing you looking at your charts all day. It's not something I endorse. It's not something that you need to do. But if you come back every few hours, then you can just simply lock in your profits and maximize your profits to minimize your risk. And quite quickly, you're at a zero risk position. Now let's have a look at the other side of the coin in terms of high liquidity zones against the trend, but it gives you an idea of how important these liquidity zones are. So we can see here that we have a previous low session during the Asian session here, 40.66. And we have a previous, it might not be previous, but we have a low here of 40.48. This is the important one because we know this. Okay, we also know this. We don't know anything else at that stage. But we probably know the Asian session's finished there, and so this high is highly important for any future targets, as an example. So we can see that this high liquidity zone here could react, especially after a big move. I don't know what that is, probably 400 pips. You're likely to get a reaction into this area here. That's where gold on steroids comes on, and I'll cover that in the next few minutes. Because the bias is still down, but the high liquidity zones are likely to take this higher from a demand area. Again, I'll cover that in the next few minutes. So once you've got this pattern emerging, I mention this a lot, the W, okay, that's a pattern which is very common and highly lucrative, so look out for that. If you see that pattern emerging on demand area and a high liquidity zone, then what's happening here is a lot of the stops are being taken out by the institutions. People are going short at the wrong time and they're getting taken out quite aggressively. So let's see what that looks like on the 5-minute chart so we can get a better idea of where we get in. When we get out, well, I think you can probably see here, that is the W. So there's a base that's been formed, and you've got this going on here. So there's your W. Okay. Now, in order to maximize that, you can, that's your change of character here. But it's initiated by this buy signal. That's your change of character there. So just simply go by the buy signals, and the bias then changes because you've got the price above the 50 moving average on the 5 minute, and it's green, which is always nice, and positive, and you can have a 2-to-1 quite easily there. Again, you can do it as set and go, which means you just have a 2-to-1 and then you forget it, let it go, or you can trail it and see how far you can get how much profits you can actually squeeze out the market, which is sometimes we want to do that. These averages, moving averages on the left, can often be targets, the 50 moving average or the 100 or the 200. However, it's best to go along with the daily bias, which helps you, along with liquidity zones, previous highs of Asian sessions, London sessions, and New York sessions. So hopefully that's helpful in terms of trading gold using liquidity. So let's go into gold on steroids in particular. Now, the strongest signals, we had a great move on Friday, didn't we? We could have had a lot more, and I will cover that in the next few minutes on the lower time frame. Now, what we know from gold on steroids is that whenever the price is above the 50, mentioned that on the 5 minute chart, but this red line here is highly significant. This green line here is the 50 moving average on a 15 minute chart. So whenever the price moves above the 50, we get the biased is long, and then whenever it moves below the 50, the biased is short. Okay, so we have to accept that the biased is short at the moment. We can't accept that the bias is long. It's not a long position to be had. This was, we banked 441 pips. What could have we done? Well, we could have had 700, 750, if you want to squeeze it to the very top, nearly 800 pips from it. And I'll show you how you can do that in the next few minutes. So before you enter, or before you do your analysis in the morning, what I would do is I put the sessions on here, Asian session and so on, but I don't really need to. But we can immediately see the biased. Okay, we can immediately see the biased towards which way you're actually going, and then we can recognize where the demand areas are and where the supply areas are from the software. It's done for you. Okay, and then we can also see where the bias is in terms of whether it's going long or short. So in coming into Monday, we don't know what's going to happen during the Asian session. Of course, I suspect the price is going to go up slightly, but we have to accept that while the price is below the 50, then there's room for this price to move down, and our target is obvious, 40.56, 40.57 into this area here, where we are going to be very, very interested in buying at that point if we get a reaction there. Let's see what that looks like on the lower time frame to help you get better entries. Let's go into here. So let's look at Friday's session in particular. Let's squeeze that up and just see that. Okay, so now we can see here the downward move during the London session on Friday was highly significant, and you can see that your 5 minute chart is coinciding with that bias as well. So you've got a big sell signal here, big sell signal here, sell signal here, Remember that the sell signals, you only get 2 bites of the cherry really, maybe 3 if you're lucky. If you expect to get 3, 4 or 5, you just won't get them because they're rare. And of course, as the price has moved significantly lower, if it's moved 300 or 400 pips, then you don't want to be selling it. If it's moved 300 or 400 pips higher, you don't want to be buying it. So this is the session as we come into New York, and we can see that the price is moving up from demand. We've got the W I talked about, double bottom on demand, and in addition to that, we have a very strong buy power of 72. That's very strong for gold. And then you come into the New York session and you buy on demand if you wish. So this is where price is. If you look at your liquidity zones from previous sessions, this might help you. As the price comes into this area, then there is a liquidity grab. The price moves out. Now, from our point of view, as a retail trader, we don't know what's happening really from the institutions, but we can gather information to say that this price is highly likely to react very shortly. So all we do is wait for the 5 minute to go all green. See that there at 1:30. And then your bias, of course, is changed and the change of character has taken place, and you trade. Now, let's see how we could have maximized it. We had 441 pips, somewhere around there. All right. So how could we have maximized and squeezed out more profits in that scenario? Now, often we find that you have the target of 2.58 to 1. It's enough, and the price goes up to there, hits it, and then drifts. But quite often, you can squeeze out a little bit more. So let's have a look at this 5 minute chart. We know everything is green at this point during this change of code. We know that New York is a good place to go, especially the early hours. 1:30, 2 p.m. is very good because New York is just about to open, the volumes are coming in, and you have London volumes, and you also have New York volumes, both together. So they're driving the market and often gives us a great trading opportunity. Excuse me. So what we can gather from this is the bias has changed to the upside. All the buyers are in, and therefore this is our entry. This is a 5 minute chart. So 5, 10, 15, 20, 25, 30, 35. So that's 35 minutes there. You could get in anywhere there. All right. It doesn't matter. We know in hindsight that it's gone up, but everything is telling us that it's going up anyway. So you've got to go with what the software tells you. Now, the way to manage this, if we have managed this here, so we enter somewhere around here, 40.73, let's say, and the price goes up to a maximum of 41.37. But the way to manage this, if you want to squeeze out as much profits as possible, is simply to move your stop every couple of hours. There's no rush. By the end of Friday, your stop would have been here, 41.20. So let's see if we could have squeezed out a little bit more out of the market. Now, of course, in hindsight, you could say, well, I would have exited right at the top there. You don't know that that is the top. We know that we have an area here on the left, which is very high interest. And we also know we have a negative divergence in the market. So that's highly likely to react. Okay, so bear that in mind. But let's say we do that here, so we get in around here and we exit here. Well, that's 483 pips. So we do squeeze out a little bit more, but it means you're micromanaging a little bit more. You're getting into the market. Now, if you don't have time to micromanage and move your stop, then of course you just set a 2 to 1 or 3 to 1, whatever you want to do. The other thing you could do is just open it and close it by the end of the day once volumes start to drift off. I hope you enjoyed that session. Give you a bit of clarity, I think. Let's go on to the 1 hour chart, which might be helpful for some of you. Now, this is particularly useful in terms of, if I can find it, there it is. This is particularly useful for people who want to get into positions more often. I know a lot of you do. I'm a position trader on Forex, so I like to go into the 4-hour chart, just click it and go. I'm not bothered what happens. But I guess that comes from many years of experience. So this is the Euro Canadian. I mentioned this in the VIP room, and I've done a blog on this. Have a look at that if you're not sure. I'll give a good explanation, hopefully, of why it should go up. There's a couple of things here we use on the Advanced Pro charts, which you may or may not have. If you've got the full version, then of course you'll have these. Now you see these triangles. That's the first thing, which is really, really important. These are hidden divergence analysis, red for sells and green for buy. So the bias is changing automatically even before you get change of character. So it gives you a clue as to if you're short, for instance, you don't want to be short anymore. All right, because the bias is changing as we speak, so that the change of character is coming. So that's the first thing I would say. The other thing I would say is this is a 1-hour chart, so it's relatively slow. It's not a fast chart. I've got the 7 versus the 9. This is a good one. Oh no, it isn't. It's this. It's the 7 versus the 50. Sorry, 7 versus the 50. So the blue is the 7 and the 50 is the red. So whenever the blue is above the red, then the biased is up. Whenever the blue is below the red, the biased is down. All right, so very straightforward. Now I've using these tools, you've seen these before. I'm just using a histogram. You can use any histogram, but this one is pretty cool. And I'm using the oscillator, which you all should know about. I've just put them together. Just gives me a bit more space when I'm recording. So what do we know? What do we know before this actually happens? We know that the triangle formation might not have been formed before the move. But we do know that because that has been formed, we're likely to get a bias to the downside. We do have change of character here. And we know that this stochastic is, the oscillator is overbought in a downtrend. Notice the blue below the red at this point. And so therefore that is a tradable event. So we can put on that order. Sorry, not long, it's short. So we can get in anywhere there as the price. What I would say is if you are looking at the chart, you want to make sure that you've got a red candle and it's falling below the 7 and below the 50. Stop is on that red line and you are going for 2 to 1. Now the bias here has changed. Now you can maximize it, as I mentioned previously. Trailing stops are a good idea. If you can micromanage, that's fine. There's not much to do, to be fair. You just simply move your stop to here until you're happy with your profits, or you just simply wait to be stopped out and you'll grab probably 2.5 to 1. Okay. Now this is where the change of character appears again and gives us a bias to the upside. And as I mentioned, I'll be putting this signal into the VIP signals room probably as soon as Monday. Actually, I'll pop in about 6 AM and I'll see whether the price is actually moving up, and it should be coming into this area here of major support. Now it might not hold, so therefore it becomes invalid. We don't trade it. But if it does hold, then I'm very interested in this. The other thing that happens once you get a change of character, so the bias is changed here, just to explain the change of character, and the change of character, the bias is changed here in terms of a green histogram, and the price is holding on to that market structure and pulling down. So this is what we call a 1, 2, 3. 3 being the profit. So we're waiting for that to become a buy, and all I'm waiting for is a green candle. Now, the other thing that the software does, which you might have noticed here, it gives you 3 targets. We can see these here. And so as the price comes, that's the entry point. It's confirmed your entry point already, 162.59. You should be long this. I'm going to wait for a green candle, simple as. And it also gives you your stop loss as well. So if this was going green, I'll be going in here roughly, and your stop would be here. See that red line? It's already given to you. Now, targets are subjective, of course. You want at least 2 to 1. So there's your 2 to 1. Okay, back to where it was. If you're going to get in at that point, you might get in a bit later. So your 2 to 1 might be a bit higher. But you have a target here, number 1 target, 163, 163.48, and 163.93. All right, so it's kind of you're getting into the detail of the reversal kind of strategy, but you're getting into it in a bit more detail and getting a bit busier in the market. So to be fair, and if it doesn't suit you, fine, don't worry. But if it does suit you and you've got a bit of time, if you've got a couple of hours spare in the day during the New York session or London session, this is an excellent way to trade. So there's a couple of points just to reiterate. The 7 biased is above the 50 biased, so the biased is upwards. We have change of character here, and we have the biased has changed on the histogram. Now if you have a look at this oscillator, this is moving down really nicely and probably going to be oversold into this area into Monday sometime, down to here. Now this is exactly what we want to see. So all this is here is a correction. Okay. And the final bit of this strategy is quite useful. And I've covered this many times over the years. And the trendline breaks are something that we often use in all assets. But some really good examples of this here on this chart, isn't there? So you can see these trendline breaks, special settings. So you can wait for those trendline breaks if you wish. So a big fat beautiful B will appear for break. So you had a few chances of selling this at certain points, break, and a few chances to buy into this as it breaks. They're quite aggressive lines, I have to say, not normal settings, but nonetheless I quite like them. And as we can see here as an example, there's a break here to the upside. So the bias may be changing quite early, but not confirmed for us. But then what will happen is as the price moves, you're going to get another trend line break happening, and that could be your entry point. I've gone on a bit, so apologies for that, but hopefully you find this useful in your trading journey, because it is a journey and it is a long-term journey. You cannot trade for 5 minutes and give up. It just doesn't work. You have to be in it for long term. I'm talking about if you're young, if you're in your 30s or 40s, then you're talking about the next 20, 30 years, like I've been doing. So hopefully that's helpful. Give me your comments if you like. If you don't, then let me know.